Cryptocurrency. What is taxable in virtual or cryptocurrency? Will you owe tax on cryptocurrency? If you were involved in a transaction involving virtual currency, also known as cryptocurrency, the answer could be yes. More and more people are entering into the investing side of virtual currency. Simply buying crypto or owning and holding crypto is not taxable. However, selling, trading, swapping, and even using virtual currency to purchase an item are all examples of potentially taxable events. Let's start by briefly discussing specifically what is taxable. You may receive crypto as income. This is taxable, similar to other income you receive. If you are compensated with crypto, you may receive a W-2 or a 1099 or no form at all. No matter the form or lack of form received, you are responsible for reporting this compensation on your return and will be taxed on the income. If you are involved in mining crypto, either as a job or as a hobby, this income is taxable. And it looks like this can be darn profitable if you are successful at it. I'm not sure how long it takes to add a block to the blockchain, but if you do, you receive 6.25 Bitcoins. And this was recently valued at a bit over $100,000. If you receive crypto as a reward or an airdrop, this is taxable income. Rewards can be received for holding your crypto for a specified period of time. This is also called staking. And an airdrop is a free distribution of tokens to numerous wallets to promote a company. Think free toaster or a gift card from your bank for banking there. Some crypto platforms give you interest for having your account with them. This is taxable income to you. You may also receive capital gains or losses from transactions involving virtual currency. You will owe tax on gains from selling, trading, or swapping your crypto, similar to traditional securities. If your swap of Ethereum to Bitcoin creates a gain, then you will owe tax on this gain. Maybe surprisingly, you could owe tax when paying for goods or services with crypto. This happens if the value of the good or service is greater than the value of your crypto when you originally received it. An important note regarding crypto capital transactions is that any losses incurred can be used to offset other capital gains. Next slide, please. Keeping on that note, virtual currency can help reduce your taxes too. Donating virtual currency follows the similar rules to donating stock and can have a major impact on your tax bill, depending on how much you're willing and able to donate. Again, you can use losses incurred in trading crypto to reduce capital gains. This might be very important information if you held an account with FTX or BlockFi, who both recently went belly up. Also to note, wash sale rules do not apply to virtual currency trading. This means you can harvest losses even if they were due to sales within 30 days of purchase. An important note regarding capital transactions is that you will pay less tax on trades of crypto that have been held long-term. Next slide, please. Now let's discuss the forms you may receive and should be on the lookout for this winter. You'll want these for tax preparation. If you were compensated with crypto, you may receive a W-2 or a 1099. These will be reported either as salary, business income, or other income as is appropriate. If you received crypto as a reward or airdrop, you should receive a 1099 MISC for miscellaneous. Exchanges that currently do send 1099s include Coinbase, Celsius, Gemini Earn, Bitstamp Earn, eToro, Binance US, Crypto.com, and Kraken. If you earned interest over $10, you should receive a 1099 INT, which stands for interest. If you sold or traded crypto, look to receive a 1099-B. Although this is not required by the IRS until tax year 2023, a few exchanges do currently provide it, like Robinhood and Cash App. While most crypto companies have switched from giving a 1099-K to giving the more appropriate 1099 miscellaneous or 1099-B, it is possible you will receive a 1099-K. This will show the cumulative amount of crypto you traded during the year. Please note, this does not show the amount of taxable gain you have. You will need the cost bases of your trades to compute the gains. Again, beginning tax year 2023, crypto companies and exchanges will be required to send 1099 forms to clients. And there is a 1099-DA, standing for digital assets, supposedly in the works at the IRS, which may show up in 2024. Lastly, and very importantly, if you don't receive any of the above forms, you are still responsible for reporting your income and capital gains on your tax return. Next slide, please. Other information and resources for you to consider. If you don't have a platform keeping track of the cost bases of your crypto, you will want to keep records of this information. This is how we calculate your taxable gain or loss. Some other basics about taxation in the crypto world. Cryptocurrency is treated by the IRS as property, and so transactions using crypto are taxed like transactions involving property or assets. In case you're wondering, NFTs, or non-fungible tokens, are considered another form of cryptocurrency. So the same rules apply to transactions involving NFTs. I mentioned it earlier, but it bears repeating that simply buying and holding virtual currency is not a taxable event. Next slide, please. Here are some links and additional resources as well regarding crypto and taxes.